If you're receiving the state pension in the UK, I have some incredibly important news that affects your November and December 2025 payments, and you absolutely need to hear this today. The Department for Work and Pensions, along with the UK Government, has just made a major announcement about state pension increases, and the official payment dates for the final 2 months of 2025 are now confirmed. Now, here's what makes this particularly crucial for every pensioner watching right now. We're looking at payment schedule changes that could affect when your money hits your bank account, especially around the Christmas period. And if you're one of the millions relying on this income for your daily expenses, heating bills, or holiday shopping, knowing these exact dates could make all the difference in your financial planning. But that's not all. There's also been confirmation about the state pension boost many of you have been asking about. We're talking about potential increases that could put extra pounds in your pocket each week. And I'm going to break down exactly who qualifies, how much you could receive, and when these changes take effect. This isn't speculation, these are official figures from the DWP that every state pension recipient needs to understand. In the next few minutes, I'm going to reveal the complete payment schedule for November and December 2025, including any bank holiday adjustments that might affect your payment date. I'll also explain the state pension boost in simple terms, show you how to calculate what you'll receive, and share 3 essential action steps you must take before the end of this month to ensure you don't miss out on any money you're entitled to. Whether you're receiving the new state pension, the basic state pension, or you're approaching pension age and want to know what to expect, this information could be worth hundreds or even thousands of pounds to you over the coming months. So if you don't want to miss a single penny of what you're owed, hit that like button right now. It helps more seniors like you discover this vital information. And let's dive into everything you need to know. Alright, let me start by saying thank you so much for hitting that like button and for being here today, because what we're about to discuss is genuinely going to impact your finances over the next 2 months and beyond. I know how frustrating it can be when government announcements come out, and they're filled with complicated jargon and confusing terminology that leaves you with more questions than answers. That's exactly why I'm here, to cut through all of that noise and give you the straight facts in plain English that you can actually understand and use. So let's get right into it. The Department for Work and Pensions has officially released the payment dates for state pension payments in November and December 2025. And I cannot stress enough how important it is that you know these dates, especially if you're someone who budgets carefully or if you have bills that are automatically debited from your account. Getting caught off guard by a payment date change, particularly around the holiday season, can cause real problems, and I want to make absolutely certain that doesn't happen to you. Now, before we dive into the specific dates, I want to talk about something that's been generating a lot of buzz in the pensioner community, and that's this state pension boost that everyone's been hearing about. I've had dozens of comments on my previous videos asking whether this is real, whether it's substantial, and most importantly, whether it's going to make a meaningful difference to your weekly or monthly income. The answer is yes, this is happening. And yes, for many of you, this is going to put genuine extra money in your pocket that you can rely on. The boost we're talking about here is connected to the annual uprating of state pension, which is calculated using what's called the triple lock system. Now, if you've been following pension news for any length of time, you've probably heard this term thrown around quite a bit. But let me explain it in simple terms, because understanding this is absolutely key to knowing why your pension is increasing and by how much. The triple lock guarantee means that the state pension must increase each year by whichever is highest out of 3 figures, the rate of inflation as measured by the Consumer Price Index, the average earnings growth across the UK, or a minimum of 2.5%. This system was designed to protect pensioners from losing purchasing power and to ensure that as the cost of living goes up, your pension income keeps pace. What makes the 2025 increase particularly significant is that we've seen substantial wage growth across the United Kingdom over the past year. Workers in various sectors have seen their pay packets increase, and because the triple lock uses average earnings growth as one of its 3 measurements, this means pensioners are now set to benefit from that same growth. The figures that have been confirmed show that average earnings grew by approximately 4.1%, and since this is higher than both inflation and the 2.5% minimum, this 4.1% figure is what's being used to calculate your state pension increase for the 2025 to 2026 tax year. Now let me put this into real money terms, because percentages don't mean much until you see what they actually translate to in your bank account. If you're receiving the full new state pension, which for the current tax year stands at approximately £221.20 per week. A 4.1% increase means you're looking at an additional £9.07 per week. That might not sound like a fortune when I say it like that, but think about it over the course of a month. That's roughly an extra £36. Over a full year, that's nearly £472 in additional income. For many pensioners living on fixed incomes, that extra money can cover your heating bills during winter, help with your grocery shopping when prices are high, or give you a little bit of breathing room in your budget that perhaps you haven't had before. For those of you on the basic state pension, which is the older pension system that applies to people who reached state pension age before April 2016, the increase works out slightly differently, but still follows that same 4.1% uplift. The full basic state pension currently sits at around £169.50 per week, so your increase would be approximately £6.95 per week, which translates to about £27.80 per month, or roughly £361 over the full year. These aren't small amounts, especially when you consider that every penny counts on a fixed pension income. I want you to really understand that this money is guaranteed, it's coming to you automatically, and you don't need to apply for it or fill out any forms to receive it. The DWP handles all of this on the back end, and your increased payment will simply show up in your account according to your normal payment schedule. Speaking of payment schedules, let's get into those specific November and December dates that you absolutely need to mark on your calendar right now. Your state pension is typically paid every 4 weeks if you're on the standard payment cycle, or every week if you've opted for weekly payments. But what complicates things during November and December is that we have bank holidays to contend with, and the DWP has specific rules about how payments are handled when your normal payment date falls on a bank holiday or weekend. For November 2025, most of you will see your payments processed on your regular schedule without any interruptions. If your normal payment day is a Monday, you'll receive your pension on the Monday. If it's a Wednesday, you'll get it on Wednesday, and so on. However, it's absolutely crucial that you double-check your specific payment date, because individual circumstances can vary based on when you first started claiming your state pension and what day of the week that fell on. The important thing is that November is a relatively straightforward month with no major bank holidays that would disrupt the payment schedule, so you can generally expect your money to arrive exactly when you're used to receiving it. December, however, is where things get a bit more interesting and where you really need to pay attention. December brings us Christmas Day and Boxing Day, which are both bank holidays in the United Kingdom, and the DWP has clear protocols for handling payments that would normally fall on these dates. If your regular payment date happens to be December 25th or December 26th, your payment will be processed early and will arrive in your account before the bank holiday period begins. This is actually good news because it means you'll have your pension money in hand earlier than usual, giving you access to those funds when you need them most for Christmas shopping, holiday meals, or any other seasonal expenses you might have. The general rule that the DWP follows is this: if your payment date falls on a bank holiday, weekend, or any day when banks are closed, your payment will be made on the last working day before that closure. So if you would normally be paid on Christmas Day, which is a Wednesday in 2025, your payment would instead be processed on Tuesday, the 23rd of December. If your normal payment day is Boxing Day, which falls on a Thursday, you would also receive your payment on that Tuesday, the 23rd. This system is designed to ensure that no pensioner is left without their income over the holiday period when banks are closed and transactions cannot be processed. Now here's something really important that catches people out every single year, and I want to make sure you don't fall into this trap. Just because your payment is scheduled to arrive on a certain date doesn't necessarily mean it will appear in your account at the exact same time of day that you're used to seeing it. Different banks and building societies process payments at different times throughout the day. Some financial institutions process their incoming payments first thing in the morning, while others might not update accounts until midday or even later in the afternoon. This doesn't mean your payment is late or that something has gone wrong. It simply means that your bank is working through its daily processing procedures. What I strongly recommend is that you give yourself a buffer of at least 24 hours before you start to worry if you don't see your payment at the exact time you're expecting it. If it's the day your payment should arrive and it's not showing by mid-morning, don't panic immediately. Check again in the afternoon. Check again that evening. It's only if the next working day arrives and your payment still hasn't appeared that you should consider calling the pension service to inquire about what might be happening. Let me also address something that causes confusion every single time we approach the holiday season, and that's the question of whether you'll receive two pensions in December or whether payments will be combined in some way. The answer is straightforward. You will receive your regular pension payments according to your normal 4-week or weekly cycle, exactly as you do every other month of the year. The only difference is that if one of those payments would fall on a bank holiday, it gets moved forward to the last working day before that holiday. You're not getting extra money, but you're also not losing any money. You're simply receiving your normal entitlement, potentially on a slightly different date than usual to accommodate the bank closures. Another critical point I need to make is about budgeting around these early payments. If you receive your pension early because of the Christmas bank holidays, remember that your next payment after that will still be 4 weeks away if you're on the 4-weekly cycle. This means you need to make that money last for the full 4 weeks, even though you received it a couple of days earlier than normal. I've heard from pensioners over the years who received their early December payment and, because it came before Christmas, found themselves spending a bit more freely on gifts and celebrations, only to realize they had to stretch their budget more thinly toward the end of the payment period. I'm not saying you shouldn't enjoy Christmas. Absolutely you should. But just be mindful that an early payment doesn't mean extra money. It's still your regular amount that needs to last the regular length of time. Now let's talk about what you should do if you're in a situation where you realize you haven't received the state pension boost that you're entitled to, or if for any reason your payments in November or December don't arrive when they should. The first step is always to check your bank account carefully and make sure you're looking at the right dates. I know this sounds obvious, but honestly, one of the most common issues is simply miscounting which week you're in on your payment cycle or forgetting that a bank holiday has moved your payment date. If you've checked thoroughly and your payment genuinely hasn't arrived when it should have, or if the amount seems incorrect and doesn't reflect the boost you're supposed to be getting, you need to contact the pension service directly. You can reach them on their dedicated helpline, and I always recommend calling first thing in the morning when wait times tend to be shorter. Have your national insurance number ready, as they'll need this to pull up your records, and be prepared to provide details about when you last received a payment and what amount it was. The pension service staff are generally very helpful and can quickly identify whether there's been a processing error, whether your payment is simply delayed for some technical reason, or whether there's a more complex issue that needs to be investigated. In the vast majority of cases, missing payments are resolved within a few days, and if there has been an error, you'll receive any money you're owed along with your next scheduled payment. I also want to touch on something that's been coming up a lot in comments and messages I receive, and that's the question of whether this pension boost is going to be permanent or whether it's just a one-time thing. The answer is that this is a permanent increase to your state pension going forward. Once the uprating takes effect at the start of the new tax year, your new higher payment amount becomes your standard payment. It's not a bonus or a temporary supplement, it's your new baseline pension amount, and you'll continue to receive this higher rate unless there are further increases in future years through the triple lock system. Looking ahead beyond just November and December, I think it's worth considering what this increase means for your financial planning in 2026 and beyond. Nearly £500 extra per year for those on the new state pension is significant money, and I'd encourage you to think strategically about how you want to use it. Perhaps you want to build up a small emergency fund so you have a cushion for unexpected expenses. Maybe you've been putting off some home repairs or upgrades that would make your life more comfortable. Or perhaps you simply want the peace of mind of knowing you have a bit more breathing room in your weekly budget for groceries, utilities, and the little things that make life enjoyable. Whatever you decide, the key thing is that you're informed, you know what's coming, and you're prepared for these payment dates, so nothing catches you by surprise. Knowledge is power when it comes to managing your finances, especially on a fixed income. And my goal with every single video I make is to ensure that you have all the information you need to make smart decisions about your money. Before we wrap up, I want to remind you that if you found this information helpful, the absolute best thing you can do is hit that like button if you haven't already, and make sure you're subscribed to this channel with notifications turned on. I'm constantly monitoring DWP announcements, government policy changes, and anything else that affects pensioners and benefits recipients across the UK, and I break it all down into clear, understandable information just like this. You don't want to miss future updates, especially as we head into 2026. and there will undoubtedly be more changes and announcements that could affect your income. I genuinely appreciate every single one of you who watches these videos, who takes the time to like and comment, and who shares this information with friends and family who might benefit from it. We're building a community here of informed, empowered people who understand their rights and entitlements, and that's something really special. So thank you for being part of that. Thank you for trusting me to bring you this information, and I'll see you in the next video with more updates that matter to you.